India's beer consumption, per capita beer consumption, is the lowest in Asia. Remember the chart of the day that we did, wherein it showed that it was lower than Nepal as well. Does it indicate potential for growth, or does it underline the bitter regulatory and pricing scenario that beer makers have to gulp down in India? Fear of higher state taxes, alcohol ban has become a standard risk too. But hey, United Breweries hold tight to its lion's share of the market. Volumes growing nearly 16% in Q3. Margins growing with the scale. Let's talk about all of this and more with Managing Director Shekhar Ramamurthy. He joins us right now on the show. Shekhar, good morning. Thanks so much for joining in. Neeraj here. I have one question for you. How did you do it? It was a fabulous Q3. All that went right in Q3. Do you see that continuing in the quarters ahead as well?
Thank you very much for your compliments and kind words. And as you said, India is a very challenging market for beer. And indeed, our per capita beer consumption is extremely low. Now, of course, you can look at it both ways, whether the glass is half full or half empty. And as people in this business and as market leaders in this business, we'd like to look at it as half full because clearly the potential for growth is there. We have large population, we have large number of young people, we have economic growth, the social mores are changing, and all that is positive. However, on the other side, what holds the industry back is that the tax levels are very high, the regulatory framework is very complicated. We are perhaps the only category or business category in this country of any significance that is not part of central subject, but a state subject. We are out of GST. Each of the states depends a lot for the revenues on alcohol, and they tend to tax beer a lot. So all those are the factors which keep the beer industry back. Left on its own, unfettered, it would definitely grow much faster. Now, as far as our own performance is concerned, what I'd like to state is one of the factors for this growth is that the base effect. That same time last year, the base was lower. You remember that over the last 2 years, we've had the highway ban, we've had the impact of GST, we've had the impact of significantly increased taxation in Maharashtra and in Bengal. So all said, the base was lower, and that clearly benefited us. Going forward, we do see growth. And I have been consistently saying this over the last few quarters, that we see the industry growing in mid to high single digits. I would say we see the industry growing at about 7 to 8% over the next couple of years. And we expect and we hope that our growth would be at least 2 points ahead of that. So we anticipate a growth of about 10% for UBL, about 7 to 8% for the industry.
Okay, your volume. Okay, so this volume growth of 16% and the street was working with a 14% number any which way, Shekhar. But this volume growth of 16%, are you saying that that's in part on account of a low base and normalization would see it cooling off to maybe 14, 13, 12 and eventually 10%?
Definitely. I mean, like I said, over the next 12 to 18 months, we see our growth to be at about 10%. It could be a little higher, it could be a little lower, about 10%. We see it to be ahead of the industry. One of the other drivers for our own growth, apart from the base effect, is that we have launched several new brands, and they're all doing well. We launched Kingfisher Storm about a year and a half ago. It's doing well. We launched Amstel recently, and it's beginning to show good results. Our Ultra and Heineken continue to grow in strong double digits. So our portfolio play is also giving us as the growth. Plus, of course, the base effect. And of course, that there is a rebound in the industry too. And you would have seen the same effect across FMCG. There is a consumption uptick, which is good overall for everybody.
Yeah, that's true. I think, and even in your industry, selectively companies did well. I think Carlsberg India business also showed some good numbers. Some of the smaller players also displayed growth. The question though I have, Shekhar, is I remember a very emphatic and confident statement from you in an interview with me about 3 quarters back, wherein you mentioned that when I asked you about your market share, and I know I bring this up every time, but you had mentioned that you will not lose market share. If anything, you will gain market share. Now, my question is, with this 16% odd volume growth, or with a slightly higher than industry average volume growth that you reckon you will clock in, would you keep on gaining some market share, or is it that the industry is expanding its footprint and you are maintaining your market share?
Well, Neeraj, the math on that is, as long as we grow ahead of the industry growth, we add share. And our expectation is that last quarter industry would have grown around 12%. And against that, we grew about 16%. So therefore, we've clearly added share. And going forward, our estimate is that the industry will grow 7 to 8%.
And you will grow 10%.
Yeah. Our plans are to 10%. So again, as long as we grow ahead of the industry,
you will gain market
we will keep
share.
adding share.
Yeah, my rephrased question would be then, because this will be simple math, yes, my rephrased question would be, would you be gaining market share at the expense of smaller fringe players, or is it happening without any conformity to the size or the scale or the geography of the player from where you're gaining the market share?
Well, there is not a simple answer to that, Neeraj, simply because, it's a complex state-by-state business. And there are some states where we are significantly adding share, some states where we are holding share. So in different parts of the country, the impact is different. But if you look at it overall, some of the 1 or 2 big players are not able to add share, and some of the smaller players are not able to take advantage of the growth that the industry is providing. So it's a little complicated to give a simple answer to that question.
Okay. Seemingly, Shekhar, Uttar Pradesh is not a problem only for the political parties, but for beer companies as well. Not just in Q3, but I think the 9-month performance as well. You would admittedly believe that there is some issues out there in the market which maybe you or the industry is not able to tackle. What's happening there?
Well, the issues are quite simple, actually. From a UBL perspective, one of the things which happened last year was that the government changed the policy and dismantled the monopoly wholesale structure. Therefore, now we're dealing with a large number of wholesalers, which is always good for the industry. And that has resulted in industry growth. On the other side, the government has recently announced another duty hike. So prices will go up again come April. And from our side, United Breweries Limited, we have a capacity constraint in Uttar Pradesh. We don't have a brewery of our own. We operate through a contract brewing arrangement. And whilst we supplement our demand through bringing stock from other breweries in the vicinity in the country, we are not able to fully meet our demand. So Uttar Pradesh is a mixed bag. Yes, it's a politically complicated state. But from a beer perspective, it's a combination of regulation, which results in high taxes. But also there is demand. And just like rest of the country, we are seeing an uptick in demand. And the challenge for UBL in the next couple of years is to gear up to meet the demand to enhance capacity.
Okay. So I'm just wondering, how would you be doing this? You're obviously not looking to set up new capacities. Are you active conversations with other contract manufacturers to up that?
Well, a little too early for me to comment on that, Neeraj.
Okay, fair.
Just rest assured that we are actively working on this, and hopefully we'll have something to share in the next 6 to 9 months.
Okay, I'll leave it at that. Okay, so the last couple of questions. Now, Shekhar, I read in a report that glass prices have moved up. I also saw in your numbers that your gross margins expanded quite meaningfully in the quarter gone by. So how's the mix shaping up, and does this size and the uptick in volumes or market share give you scale and ability to expand margins even further from where they are right now?
Margins in our business are a combination of portfolio, state mix, etc. But what we have been able to do over the last couple of years also take a very strong look at our cost structure, and we've been able to take out quite a bit of non-value adding costs. That has helped our margins. As far as glass prices are concerned, indeed, the bottle prices have gone up by almost 25% in the last 4 months. So that's been a huge hit on our overall cost base. And so there's very little we can do about it because the glass manufacturers have taken 2 to 3 price increases in the last 4 months. And in fact, even after that, there is shortage of new glass in India, and we are supplementing the new glass requirement through imports, which are even more expensive. So glass is a huge cost issue for us. But overall, we see that our strategic intent is to keep the margins at a healthy level through a combination of revenue enhancement, portfolio expansion, focus on profitable states, and overall look at our costs. Because while glass is going up, we have to find ways and means to control costs in other areas. And that's what we are planning to do.
You would maintain margins or expand them?
Our intent is to hold margins.
Hold margins. Okay. My final question, Shekhar. What's your response when you meet large institutional investors and when they ask you about the issues that a business like yours face when it's subject to so many whims and fancies of state governments, when, bans or timing issues, so on and so forth? How do you respond to them? How does a large institutional investor approach investing a large chunk in your company when the industry is faced with so many vulnerabilities, if I can use that term?
Oh, well, I will go back to what you said right in the beginning of this chat, where you very clearly and correctly mentioned that here is a country which has huge potential, but also huge regulatory roadblocks. So that's what I or my colleagues tell the investors too, that here is a country and here is a business which has huge potential. And of course, there are issues. And it's our job to try and maximize the potential and work within the constraints that are there. End of the day, our business is the business of building brands. Consumers like you, buy our brands because you want to. So it's our intent to continuously invest behind the brands, build scale, and work with the regulation, because every business has regulation. It's just that ours has a little bit more than others.